Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I'm going to be starting a new daily trading vlog, which is going to be insane. If I can keep this up, we'll see. All the other videos on this channel are going to remain the same as far as the weekly analysis goes, or semi-weekly or more analysis. All the other alt stuff's going to stay the same. So here's the plan. It's called the 4-hour follow-through. Every day I look at the 4-hour candle. That gives us 6 4-hour candles every video to look at. I'm going to look at the top 3 markets on coinmarketcap.com. That may change. I will always exclude Ripple from the top 3, so if Ripple ever creeps up again, which I hope not, I'm just going to exclude it. I've been wanting to do this for a long time and trying to figure out the best sort of avenue to do that, if it would be Periscope or some other video platform, some sort of live trading platform or live video platform, but ultimately I just settled on YouTube because you can go back and watch it. It's part of the channel already. And the other part of this whole like tracking your trading thing and broadcasting it to the world, and whoever wants to watch. So thank you, 1,400 subscribers. Went from 0 to 1,400 rather quickly, so that's cool. Gary Vaynerchuk said something that really made me do what I'm doing now, which is don't create, document. And that's really all I'm doing with the videos and all the articles on Brave New Coin and Bitcoin Magazine. So all this is another arm of documentation of what I'm already doing anyway. I look at the 4-hour charts every day. I might as well just show everyone who seems to be interested in how I'm trading, what I'm doing, by the comments on Twitter and the YouTube videos and Telegram. So just going to give you more trading style from me. So how we're going to track the actual trades, I sort of went back and forth on making a new account or not. I'm one broker in Poloniex, but I've decided just to keep my one broker account as is. I'm going to label all of the 4-hour trades as such, the 4-hour follow through. You'll see the label in the comment. All the 4-hour trades are going to be public. It's all going to be on Bitstamp. That way I can see it on one broker and you can follow along if you want as well. Everything else is going to be on Poloniex. So I'm showing you this to show you, yeah, I do have balances here, okay? That's important. I transferred one Bitcoin to Polo a few minutes ago, so it should be there anytime now. So I'll be using that to trade any of the alts that pop up in the top 3. And if you want, you can pause the video and look at my bags. Okay, we're going to start with the mother coin, Bitcoin. And I'm always going to use alt to Bitcoin ratio. I'm not going to use USD ratios. I just think it's better, and that's really all I have to say about that. So on the side here is a notepad of things I'm going to be looking at and looking for in every single video. I'll try to keep this up on the video. It might change slightly depending on certain things, but basically it's everything I look for already, and I think it'll be enough. I'm going to try to keep these videos 10 minutes or less, so that way I don't have to edit them too much. And naked just means nothing on the chart except the candles, literally. Candles just means you know, candle patterns or candles themselves, like tweezer top, tweezer bottom. This would be like a spinning top candle. Spinning top candle here. Alright, so naked, what do I see? I'm seeing sort of a W bottom here. I think that's, everybody can see that. That's pretty obvious. Just a W like this. And you'll notice the W doesn't always have to be at the exact same previous low. It would makes more sense if it is, and it's better if it is, but it doesn't always happen like that. Another thing this could be is an Adam Eve. Adam Eve looks like this. It's a V and then a U, and you'll notice that I've talked a lot about this lately on anywhere I can, just because it's really there all the time. And the inverse Adam Eve would be a bearish reversal pattern. So you can see the V is clearly there. You have a sudden drop and then a quick return to what is the 50% fib of the move. Okay, so that's the neckline. So the breakout for the Adam Eve or the W would be a break of the neckline here. Not really the neckline, but the 50% fib horizontal resistance here, $1,115. Another thing I'll do for these charts is write out what I'm looking at, what I'm looking for, and then at the end of the video I'll just post 3 charts if they're not too messy. That way you can see what I'm looking at. Okay, so those are Naked candles, I don't really see anything candles per se. You know, tweezer top, it's just kind of ranging. So there's nothing much to say about candles here. And if I add a fib to that, you can see if I start from this point and go to the low, that makes sense as far as where we bounced from. It's always easier to do this after the move has happened, obviously, but you know, you can move it to here, and you can see that this was essentially the reversal zone. We didn't get much higher than 1100 here. So if you want to just use that, that's fine too. It's always a safe bet just to use the most previous top as far as the top is concerned when you're on like this time frame. What I really like doing for Bitcoin and any crypto is comparing the previous style move or drop. So if I'm looking at this here, this was the PBOC January 5th or something like that, announcements. You can see if I go to this local high, local low, we didn't make it to the 50% fib here, and then we broke down again, and that became the 50% fib essentially. So again, this gives me evidence for I'm leaning bullish, okay? So then if we look at just horizontal resistance, I think we can all agree that there's a giant zone here where it's either resistance or it's support. It's never both. Here you can see it zoomed through or it held, and here it essentially zoomed through in 3 candles or it held, okay? So this area is a very, very, very key level that should it break, expect us to go below this level. I don't expect it to break based on what I know on the daily, which I'm going to try to not use as bias for this time frame. So this series is going to be all about focusing on the 4 hour specifically, because my argument is that the 4 hour is both good enough and better actually than any of the other time frames generally to take positions of size on. And as far as resistance is concerned, I think we can agree that this zone is essentially resistance, and I'll clean up these triangle or rectangles here. Okay, so if we shade it like that, green is support, red is resistance, this is how it looks. And again, this is resistance because it's either touched here or never touched or essentially supported or just zoomed through one way or the other. So it's either support or resistance. It's never usually both. There's some argument up in here for this, but it's never usually both. And you'll notice this is the previous all-time high zone. So again, we came back to that all-time high zone here and failed to break that level. All right, so that's enough of that stuff. Let's go to Heikin Ashi. You can do that by clicking the drop-down arrow there, just clicking Heikin Ashi. Going to leave everything else on the chart. My argument with Heikin Ashi as far as effectiveness is what I'm looking for is 2 or more candles that are of the same color, and at least the second or third candle that makes a higher high or lower low in the bearish case. Higher high here, higher close, excuse me. Either higher close or higher open, okay? And it's the same colors. So as far as the Heikin Ashi right now is telling me we're looking at a bearish continuation because red, 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 all 3 of these closes were lower than the opens, or opens lower than the closes, whatever I'm trying to say there. And I'll explain stops again once we get into a trade with Heikin Ashi, but I'll just leave it at that for now. And you can see again what I'm looking for, 3 or more candles that are the same color, and you just ride that sucker till it stops you out, which in this case it would have. Okay, so we go back to normal candles. Let's turn on cloud. Make sure if you want to follow along using these settings here, 2060, 120, 30. And what other things you can do to turn off all the junk on your chart, just hide all the drawing tools. And double clicking any axis just auto fixes it. Oh, and make sure your chart's in log too. If you haven't used log ever, check that out. Alright, so what am I seeing here with the cloud? The #1 indicator, in my opinion. We're definitely bearish because we are under the cloud. So price is under the cloud, cloud is bearish, TK is bearish, and I don't have it on here, lagging span is bearish. Let me just add that real quick. And lagging span is below cloud in price. So it's bearish, but being in price means it's neutral. So overall, this is almost 100% bear. Some bullish redemption is this flat cloud here. I say flat cloud equals magnet. So the real trade, and everything's going to turn back on now, but the real trade would be edge-to-edge entry from here to here. And you'll notice that makes sense because if this is a support resistance zone or a key zone, and we're bouncing between fibs, and you'll remember I said that this zone is either support or resistance, it's not both. So it makes sense that should we breach this zone, we would reach the other zone. So the cloud's just telling me that without me drawing anything on the chart. So there's a possible edge to edge there. Okay, so I added that to the list. Cloud 100% bear. We've got edge to edge potential. We've got flat Kumo equals magnet. Okay, so let's turn all this off and check 5200 EMAs. I'm using these, but you can use anything you want. I just use a high EMA and a low EMA. I like the 5200. It's just the basic EMAs people look at. Okay, that's not the reason I'm using them. I just like them. It makes sense. So I posted this the other day on Twitter, but what I'm saying here is we had a almost cross, or basically a cross here. That was bullish. Okay, anytime the small EMA is above the greater EMA, that's a bullish cross. Basically, the market's moving faster than the previous average. So we get the bullish cross, and we ride it until we get the bearish cross. Now you can see you obviously need to use stops pretty efficiently because otherwise you're just going to lose 50% or more of the trade. Okay. And then my argument was you re-long at the cross again, which would have worked out. Obviously this is hindsight, but that's what we're going to look for here when we're looking for a recross. So the 5200 on the 4 hour right now is nowhere near a bullish cross. So it's definitely bearish more than anything. And then B-bands here aren't much help for me. Some people trade them as support resistance, which is fine. You can see there's argument for support at 1K, which is psychological resistance anyway. Support. So what we're looking for on the bands as far as actionability, for me, it would be a squeeze of the bands, and you can see we're nowhere close at all on that squeeze currently. So next on the list is Pitchforks. Let's draw that. So just so you can see the points I'm using for the fork, all the anchor points need to touch price somewhere. They can't just be out in la la land. They have to actually be touching the price. Okay. Otherwise it's just a channel, which is fine, but it's not a pitchfork. So I'm using the Finex dump August 2nd, and then the PBOC to all-time high return January 3rd through the 11th. Okay. So you can see we're getting uncomfortably close with flirting at invalidating this pitchfork. Depending on how you want to read this, we've already invalidated it because we've closed a few times below the lowest quartile. You can see we're back into it. So the upside for anything in the pitchfork, if it's still real, would be this median line, which is the red line, the return to mean line. And you can see how important this line has been. Again, anytime you're drawing anything on a chart, you always want to look at if it includes past data, does it make sense? Does it line up with everything? This isn't curve fitting so much as just making sure what you're drawing is right. The points don't change. These points are always there. They're already done. Everything's happened. So you can see, again, what you're looking for is this horizontal, diagonal, to be resistance or support. And you can see, despite any event, news announcement, etc., this has continued to be support or resistance. This is clearly resistance. This is clearly support. Support, 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 support. What else? This a little less so resistance and support. This clearly some sort of resistance here. So yeah, there's a bunch of horizontal zones in there and other stuff going on, but the pitchfork just in a vacuum makes sense to me here because it's fitting price nicely. Not curve fitting, it's just fitting price. So if it fits the price in the past, you'd expect it to fit the price in the future. Obviously that's saying a lot, but that's how I read it. So again, median line in the pitchfork is the upside here, which is basically return to previous level. Based on the pitchfork, this is the buy zone. Anytime you're in the lowest quartile, that's a buy. Highest quartile, that's a sell. So the question now is the pitchfork bullish because it's in lowest quartile, or is it just bearish because it's going to get invalidated pretty soon? This is where you have to make a game time decision, figure out what you want to do. And next, let's look at pivots. So I just use the traditional. I go between monthly and yearly most of the time. I view the pivot, the P, as the return to mean horizontal level, and anything above or below that as resistance or support. And you can see we're in this below mean level. and the pivot acted as resistance, which matches the W bottom Adam Eve theory. Should we break the pivot, you'd expect us to reach for the next pivot up. The same thing goes here. If we break this pivot, we're expected to reach the S2 pivot. So that again matches our horizontal support zone. We said, you know, this level here is either support or resistance. It's not both. And that makes sense that the next zone down would be 805. Okay. If I go to yearly pivots, it makes it even more clear that support's between 770 and 805 and resistance at around 1200. And you can see that the mean for the year based on previous year is around 770. So you can see pivots don't help us much there other than give us a range as far as where we expect price to be. So, you know, if we start breaking pivots like we do on this monthly, you know, we were breaking all these pivots, and the question after we break 3 pivots becomes, do we have momentum to hit the next pivot? At the time, it certainly felt like it, but, you know, I wasn't looking at this specifically on the 4-hour. So that's some more evidence that, you know, if the momentum's not there to reach the next pivot, maybe it's time to start buying. Just a small piece of evidence. So turn on the oscillators. My least favorite part of any chart is always the oscillators, because I think people just use these the wrong way and they don't know how to read them, including myself. So really all I'm looking for with oscillators is divs. There's no div here. We have a higher low in price and a higher low in RSI. So there's no div. Stoke is Stoke. I'll try to talk about that more in the other videos. So if I turn everything on and we look at everything together, you can see there's nothing clearly bullish or bearish about this. The next question becomes, should we put bids or asks anywhere? I think I like the fork and chart pattern enough to go long here, quarter size position. So I'm gonna, for both the alts and the Bitcoin, I'm gonna use just one Bitcoin, and that might change, but just from there it'll just be easier for the math. So I think this is worth at least a quarter position size entry, just based on the Pitchfork and the chart pattern. And your position size should match your confidence of the trade. Okay, you shouldn't trade your account every trade and expect to make money, because not all your trades are probably going to be the same confidence level. If they are, great for you, but for most people they're not going to be. You're certainly better off if all your trades are slam dunks based on your system, but you can certainly play around with it, and that's what we're going to try to do here on this series. Play around with position sizes, but keeping the time frame the same. So as far as targets are concerned, again, this is an early entry, so there's definite risk here that this trade isn't going to work out. But the target, I'm just going to use the flat Kumo, and basically what it is here is taking in this low and this high. I think that's just the 50% from there. Everything's going to turn on again, so bear with me on this. Yes, it's a little above. So it's that previous high to that low. Okay, so that's our target. Our target's going to be 1147. And because one broker is not just Bitstamp, it's Coinbase and Bitstamp, you have to play around with the numbers a little bit. So now we're trying to figure out our stop, right? So if I add the R&R system, you can just go to TradingView on the side here, long, short, okay. So you draw it out where you want to enter, where your target is, where your short would be. If we keep this around 3, the risk-reward ratio right here, I really like 3 to 1 as far as just generally. Here it's kind of random because there's no set level per se. We can certainly use this as the low or this as the low, but you can see if we go down here, then it's kind of a wash. You don't like being in the less than 2 zone. I don't like being in the less than 2 zone. You can certainly make your target much higher. I just really like this level with certainty on the cloud. So this is the Bitcoin portion. I'm going to cut this today into 3 videos just because this ran long because I'm explaining stuff. So I'm going to go long on one broker, and I'll label it as such for the channel.